This is 95.3 Business Now.
Welcome back to Business Now. An estimated sum of 400 billion naira is projected to occur as daily loss in the already fragile Nigerian economy if the national protest billed to begin tomorrow, the 1st of August, is not properly managed. The Chief Executive Officer at the Center for the Promotion of Private Enterprises, Dr. Muda Yusuf, advised in the statement that the protest could be organized and policied to avoid it being hijacked by criminal elements and could be held for just one day in order to minimize the economic cost of the disruption to businesses. Well, let's turn to Felicia Wolokwe, an investment research analyst at Maritime Securities, to discuss how the protest could disrupt the financial markets and what it could mean for retail investors. Good morning, and also, of course, the expected impact on the economy. Great to have you on the program this morning, Felicia.
Thank you for having me. Good morning.
All right, Felicia, are you concerned that the planned nationwide protest starting tomorrow might disrupt the financial market activities?
Okay, so the concern would be for the potential escalation of the protest. The protest in its own would not be, a sort of major concern for the production activities and even, the impact on financial markets. But as you said, the likelihood of the protest being hijacked by criminal-minded individuals and, the protest escalating into activities such as vandalism, destruction of properties and infrastructure. These are the things that, that brings the concerns, as it could signal that there's political unrest in the country. And these are what investors are actually looking out for.
Now that you've talked about investors, what is the mood of the local retail and institutional investors since the protest announcement was made some weeks ago and up until yesterday?
It seems that the mood in the equities market usually has been really downbeat. Not really downbeat here. The market has been trading sideways, but I'll say tilted to the negative side. So that mood still remains the same. Since the news of the planned protest came on, the impact has not been really significant. The equities market has been in a really, downturn mode. So, that mode has still persisted, and there have been other developments that have impacted this mode in the market. So, I would say the impact of that particular news on the market has been muted because, of course, the concerns would be for the escalation. Currently, the concerns are that, what would we see? Are we going to be seeing another answer to the potential escalation would be what will raise concerns for investors?
I also am interested in knowing, how would a national protest impact how Nigeria's bonds are priced at the international market?
Now, speaking to international investors, there are certain things that international investors look out before deciding to invest in any country's, security in any country's instrument. And looking at the political environment of that country is one major thing that investors want to look at. Investors would want to know if that particular country has a stable political environment, as it is one thing that could impact it will impact the attractiveness of that instrument to international investors. And it's a pattern over time that investors generally they perceive instruments from countries where there's political unrest or where the political environment is not so stable. They perceive those instruments as more risky. And, when you believe that an instrument is more risky, then you want to demand for a higher premium, because the risk is higher from your own perception. And that could, of course, impact the pricing of those instruments.
Well understood. Do you foresee the Naira taking some hit? If the protest happens as planned and perhaps what if it is prolonged?
Okay, so a prolonged protest and it happened like we saw in 2020 could mean different things, and some of the consequences of this prolonged protest could result in a different outcome for the Naira. Yes. So there's the fact that investors could begin to see Nigeria as not so appealing for instruments. And remember that capital importation has been one thing that has been able to help liquidity for the Nigerian foreign exchange market. So if we see a prolonged, protest and investors begin to, they get wary of Nigeria as an investment destination for their funds, which we need to maintain liquidity in our foreign exchange market. And then we might begin to see maybe the volume of capital inflows. And when I say capital inflows, I mean foreign currency inflows into the country. If we see that maybe reduce or wane, that could mean that liquidity in our foreign exchange market could also reduce. And that is when the outcome for the Naira, which, could now be that we'll see the Naira depreciate further in foreign exchange market.
All right, Felicia Wolokwe, investment research analyst at Meristem Securities. We appreciate your time on the show this morning. Do have a great day ahead.
Thank you very much. Thank you very much for having me.
All right. And that's the package of the show for today, the 31st of July. I am Aramide Falorunsho, and we wish you a great day ahead, everyone. It's bye for now.
This is 95.3 Business Now.